Hello, everybody. Welcome to Collect Investments. Today, let's continue to talk about tax harvesting. Let's consider a scenario that you have to do tax harvesting multiple times within a short window because we cannot time the market perfectly, and market may continue to drop after you just did a tax harvesting. So let's use this example. Assume you already have some QQQM in your stock account, and you plan to replace QQQM with 1Q, VGT, or XLK. All these are technology stocks, and in the recent years, their performance are very similar. So if you look at the picture, the axis is the time in days, and assume on day 8, you think the stock has dropped enough, so you sold your QQQM and you bought 1Q. And on the picture on the right, you can see stock has dropped a lot, reached point A. And then the wash sale rule said, you are not allowed to buy QQQM within the 61-day period, which is A minus 30 to A plus 30. In these days, if you have a transaction to buy QQQM back, then the capital loss when you sold QQM on day A will no longer be counted, and those capital loss will be added to the cost basis of the buy transaction. So of course, we will not buy QQQM in the next 30 days. And if you have bought QQQM in the previous days, it's okay because likely you have sold all of them on day A. Now, you have sold QQQM and bought 1Q. And then after a few days, assume it's still within A plus 30, the stock continues to drop and it reached point B. At this point, your 1Q already has some new loss and you want to use tax harvesting to get more capital loss. You cannot switch 1Q back to QQQM because you are not allowed to buy QQQM if you want to realize the capital loss when you sold them at day A. Then at this time, you can actually sell 1Q and buy another technology index, such as VGT. And then after a few days at day C, you find the stock dropped even more. Okay, so now you can switch VGT to XLK, which is another technology ETF. At day C, if you have some 1Q you didn't sold last time, you can also sell them. So it's okay to sell within 30 days as long as you don't buy them back. And after a few more days, assume it's at day D, finally, if it reach the 30-day limit, then you can buy QQQM back because it's beyond A plus 30 days. So you can switch XLK back to QQQM. But if the stock already goes up and you didn't have a chance to switch them back, your stock account will be in XLK and you will hold XLK for a long time. So that means when you pick the replacement for QQQM, make sure you pick something that you are willing to hold for many years because we never want to time the market. We want to hold for the long term so that we can enjoy the long term gain of the index. Okay, so that's all for today. Thank you.